As a trader, you've probably experienced a consolidative market where both buyers and sellers get stopped out. Now, in this video, I'm going to be giving you a step-by-step guide on how to trade an area of consolidation and what you should do or what steps you should follow in order to take profitable trades when the market is moving sideways. We're going to be using 4 main confluences for this overall trade breakdown. So make sure to pay attention and let's dive straight in. All right, so we're here on GP Swiss on the 1 hour time frame, and the very first thing that you want to do when the market is consolidating like it has been over here is simply marking out the overall range high and marking out the overall range low, because what we expect when the market is consolidating or moving sideways is that there's going to be resting liquidity above the range and there's going to be resting liquidity below the range. Now, the overall aim of the game is to take out the range high and look for a reversal, or take out the range low and look for a reversal in the other direction. Now, this is the overall key concept that I want you guys to understand after watching this video. This is what we're going to be looking for. However, the market will always most likely move and continue in the direction of the greater market structure. So for example, if the market is trending in towards the downside overall, from for example this swing high in towards this swing low, you want to be looking for a liquidation of the range high to then trade the overall reversal and continuation back in towards the downside. Now, what we're going to do here for GP Swiss is we're going to go up a time frame, and I'm going to show you exactly what you need to know when analyzing the 4 hour. So what we see here on the 4 hour time frame on GP Swiss is that overall we had a very impulsive and bullish phase in towards the highs, where the market was really trending in towards the upside. The market made a break of structure in towards the upside here, and therefore I identified this here as my overall swing low and this here as my overall swing high. Now, step 2 is always drawing in your premium versus discount tool to understand where price is currently trading. So what I see here at the time is that price was trading at an overall premium and that the market gave us a reaction at the 0.5 fib. Now, when the market reacts to the 0.5 fib, you always need to understand, is there an area of demand, for example, that is in correspondence with that 0.5 fib that is pushing the market up higher, or is it just purely the 0.5 fib? Because if it's purely the 0.5 fib, then most likely price is just giving you a bounce. But if there is a demand zone in alignment with the 0.5 fib, then it definitely could be an overall reversal that could potentially push price up higher in towards a new higher high. Now, in this particular example, there's no demand zone here to our left, so therefore I see that there is potential for the market to potentially push down lower in towards what could be, for example, this demand zone over here. So with that understanding that there is still demand open over here at the lower bound of the overall range, and with the 4 hour time frame internally being bearish. So what do I mean with the 4 hour time frame being internally bearish? Well, what we can see here is that the market had an overall internal uptrend, push up, push down, push up, push down, push up, and then a break of structure in towards the downside. Now we're seeing an overall retracement, so the next leg could potentially again be in towards the downside. So we know that the greater piece of market structure, or the outer layer of market structure, still has the potential to push price further in towards the downside. So what I'm now doing here on the 4 hour time frame is understanding where the market is trading. Okay, so from that market structure perspective, we are overall bearish and we're potentially looking for another downside push. Now, when I go into the 1 hour time frame, again, we can very clearly see that the market overall is consolidating. But remember what I mentioned at the beginning of this video: when the market is consolidating within a range, and let's say the overall greater market structure is bearish, what we're simply going to be looking for is a raid of the overall range high, where we liquidate that range high to then look for an overall downside continuation trade. So now we come back to that phase where it was very important to mark out the overall range high, right? Which is this blue dotted line, which I'm going to make nice and thick here for you guys. So what I'm ultimately just waiting for at the moment is for the range high to get liquidated, and then for an overall downside continuation trade to start taking place. So what I'm going to do here is I'm going to look at the market structure again here on the 1 hour time frame, and what I identify is that here we have a 1 hour break of structure in towards the downside. I draw in my Fibonacci retracement tool, and what I see here is that we're rejecting the 0.5 fib as well. So we have the market structure that is bearish. We have the overall premium versus discount tool that is also bearish as well, where we're tracing in towards the 0.5 fib. And next to that, we have the liquidation high, which I'm looking to get taken out to then look for a potential short in towards the downside. Now, you might be thinking, Fabio, we're missing one piece of confluence, which is supply and demand. Now, it's extremely important to understand that supply and demand actually is pretty much the same as an area of liquidity. When we have a very clear liquidity high, the overall liquidity high in itself and price above that can be seen as your area of supply. So in that sense, supply and demand and liquidity correspond as an overall piece of confluence. So what I'm now waiting for is for that range high to get swept. So what I see happening here now on the 1 hour time frame is that we sweep the overall high of the range. So after a sweep of that overall range high, what I'm now looking for is confirmation, because what you never want to be doing is simply just shorting on the range high. Stop loss, where are you going to be placing it? So what you want to be doing here is waiting for something called a fractal structure shift. So what I personally use is the fractal structure break indicator. Now, what we want to see after grabbing the overall range high is now a break of the fractal low in towards the downside, the retracement, and then the overall downside continuation in towards what was the overall higher time frame area of demand on the 4 hour. So what I'm now doing is again going into the 1 hour time frame, and what we can now see happening here is a break back in towards the downside of the fractal low, meaning we now have a valid entry and that we can place our stop loss safely above the overall range high, as the overall range high that got rated here with this piece of price action is the liquidation. And what we now expect is, okay, the liquidation has taken place. We don't need to come back up to the highs to liquidate anything. And we're now definitely going to start pushing back down in towards this overall liquidity low that we formed over here on the 20th of August. So that is obviously going to be your first TP, but you can see, okay, the risk to reward is not very good, only 1 to 1.33. So always get at least a 1 to 2 risk to reward. That is always going to be the goal. Now, what we can see here is that that 1 to 2 risk to reward aligns beautifully with that 4 hour area of demand. So what we now wait for is for the overall continuation to take place. And as you can see, the overall initial push in towards the downside happens. Now, here on this internal piece of price action, you can see again, the 0.5 fib is acting as a natural area of support and resistance. And then right there, once the overall 0.5 fib rejection takes place, downside continuation gets fulfilled and we push back down lower, eventually in towards RTP and in towards that 4 hour demand zone, from where eventually the price then heads back up in towards the highs. So this is how you trade within an area of consolidation and within these overall summer markets when the price is moving sideways. So what you want to be doing is, again, notifying yourself of, okay, what is the overall range high and what is the overall range low? What is the greater outer piece of market structure that I can trade in line with together with that area of consolidation to successfully then trade an area of rangy price action. Now, if you have any questions based on this video, make sure to let me know in the comment section down below, or simply click on the link in the description, which will lead you to WhatsApp, where I am open for any questions that you might have. Well, thank you for watching. If you found this video informative, make sure to leave a like and subscribe to the channel, and I'll see you guys in the next one.